Good day, everybody. It's your guy here, The Unknown. And today I want us to talk about something important. We will be looking at a couple of beautiful trades that happened today. And just to say, today was the best day since the year began because today they were just giving free cash, okay? So, guys, I want to show you something important and I want to help you be able to judge trades, okay? So just stay with me, and if you are new, subscribe and hit the like button for the algorithm's sake. Okay, so guys, let's look at this. This is the easiest trading strategy. Just look at this. This is trapped volume. How do we know it's trapped volume? Okay, because there are people who have been asking for the longest time, what is trapped volume? Okay, you see here, this is the closing price of yesterday. This is the high of yesterday. Okay, as you can see here, it's the highest point that was reached the previous day. Okay, so look at this. They send people down, and right before the session opens, they exploded up. Okay, when the session opened here, I told you we do this 5 to 10 minutes before the session opens, okay, which is here. Okay, so when our prices are here, we will be actually coming to our charts, and when the moment we come to our chart, we will know that, okay, everybody who went down is trapped. Everybody who went down is losing money. Okay, so that's trapped volume. If you took a sell anywhere inside this box, by the time prices are here, you are in a losing position. And just remember that there are people who don't use stop losses. Okay, that's important. And those people believe prices will just go maybe 30 pips against them and start going in their direction. However, market makers are well aware of that. Therefore, they will punish these people and force them to close their trades, because if you are at a loss of roughly 100 pips and you are a day trader, you are literally gonna close that trade out of pain, mostly if you have taken a big lot size, and those are the people who the market is after. Okay, so when prices open here, everybody who went down is at a loss, and many have already closed their trade out of pains, but those with big accounts might have not closed their trades yet. So prices will keep shooting up until they get punished. That's why even for us, we use patterns. Why? Because patterns trap volume below and above, and then once we have identified that these traders are trapped, we understand that the market is going to go against them at least 50 pips. Why? Because 50 pips is too much for most people. They will be forced to close those trades, because obviously if you are at a loss and you don't have a stop loss and then eventually they will go in your direction, the market did nothing on you. Okay, they didn't even take your money. However, if they go against you using many pips, you are gonna force to close your trade at a loss. So please, guys, I believe you understand that. Okay, so now look at this. Sorry for taking time to explain. I'm really careful these days on time, because I know people don't need long videos, but it's not fair. I'm leaving a lot of things out for those who are really serious, and it's not fair. Okay, so guys, look at this. Look at this. This is a pattern, and they are gonna give you these patterns day in, day out. Okay, these are patterns you're gonna get day in, day out. Okay, if you look at this pattern over here, this is a head and shoulder, and somebody said they doubt these patterns whenever they see them. Yes, many people are doubting them because people are expecting a very clean head and shoulder as is drawn on the internet or everywhere. They are not gonna give you that. Okay, or they're going to give you that out of 10 times, they might give it 1 time. Why? Because they want to convince you that these patterns are there. However, they don't want to give you free cash. Remember, if they're going to give you clean patterns each and every day, you're going to get free cash. So market makers are not in a business of giving out money. They are in a business of taking money from everybody. Okay, so that's the most important thing. If you look here, this is what we call a neckline. Some people call it a death center. Even Shabaka calls it a death center sometimes. Okay, look at this, guys. This is a shoulder, this is a head. They came back up, as you can see, they pinned, but this candle didn't just become a pin, it went up. Okay, it was a full candle going up before it closed. This is where they broke down out of the pattern. This is a descending Head and Shoulder. Okay, that's why I always say read Shabaka's book. Okay, it's because you'll get to understand more of these patterns. If you don't have the book, or maybe you're not reading because you don't have the book, I have a link in my description. You can go and get the book free on Amazon for 30 days. You just sign up for a free 30-day trial, and then you'll get access to this book. Please, guys, when you do that, start by listening to the audiobook of Mark Douglas, Trading in the Zones, or The Disciplined Trader. That's going to help you psychologically. Okay, psychology plays 80% of the role, okay, in every successful trader's life. Okay, and then you can also read Shabaka, okay, or Peter Brandit. Okay, and one thing I can tell you is that books that were written way many decades ago, way like long ago, they provide value more than the current books we have. Most of the people who are writing books now, they've lost the meaning of chart patterns or charting. Okay, so those old books like Shabaka, Peter Brandit, John McGee, those are the real books. Okay, if you go and sign up for a free trial on Amazon, please read those books. They will help you a lot. Okay, it's gonna be free. You can cancel the trial anytime before 30 days. You won't pay even a cent on that one. Okay, but please take advantage of this opportunity. Okay, so guys, you see they broke out. This is a very beautiful breakout out of a Head and Shoulder. Okay, so if you took this trade over here, it delivered roughly 43 pips. That's a lot of pips. Okay, and then after that they started giving something like you see, this is what they started giving. They started giving something like right angled triangle, and then they broke out. Okay, and I know many people might have taken this trade. However, yesterday I showed you something very, very important. And by the way, when I'm showing you the importance of levels, I'm not adding anything to the strategy. It's just information that will help you. Remember, we want to make our rules strict, and your job is not to force patterns to happen. Your job is to be there, wait for the patterns to happen, and wait for the evidence candle. Your job is just to be there. Just be there. Okay, be as patient as you can. Just be there. Okay, so I want, for those who took this one, sorry, but I want to show you something. I'm going to show you how to judge trades. Okay, I want to show you, this was perfect. This is what I love. I love it when they start by going up and then they collapse. That's what makes me happy. You see, they went up with a white candle and then collapse. This is how you're going to get the best trades. However, for those who took this one, let me show you something that I explained yesterday as well. However, we'll have to go through Nasdaq first. Okay, so guys, look at this trap volume before the session. Those are our criteria. Okay, those are our criteria. By now I believe you are just singing them. Okay, let's look at this. This is important stuff. Okay, because most of the time I'm rushing and I'm chasing time and I leave a lot out, but today I want to share these things with you. You see, these are the criteria we follow each and every time. Okay, if you can identify what type of trend it is, you must do that. If you can't, it's okay, because there are days when you actually won't be able to do that. So look, they have trapped in between the high and the low. Okay, not much different to what S&P did, because even S&P, if we look at it, looking at a 5-minute chart, you realize that they trapped at the same level. Okay, and the reason is indices move later during the US session, so they're just gonna use the entire day to trap. People are losing a lot of money trading this nonsense. Okay, and then most of them are gonna get trapped and closed. Okay, so that's why we wait for the equity opening time. So when we come to Nasdaq, same thing, they trapped below here. So everybody who went down, by the time we are coming to actually observe trap volume, we realize that everybody who went down is literally losing now. That's what we call trap traders. It's not something complicated, because obviously if prices are here, what happened if you took a sell here and you took a sell here and you took a sell anyway above this level? Obviously you are losing. And remember, there are those who don't use lot sizes. I've already explained these things. Okay, so these are trapped traders. If the session is opening in the middle, then we don't know where volume is trapped. Okay, but if it's opening like this, we know that this is where volume is trapped. Okay, so we go to a 1-minute time frame. Okay, don't forget, I'm still gonna explain what happened on S&P 500. I'm trying to show you how to actually avoid trades that might actually go to a loss. Okay, first of all, let's identify the pattern. If you look at this, it's not a clean pattern, but you can see it's a head and shoulder. Okay, this is the shoulder, this is another shoulder. Why? Because this pin just didn't just become a pin, it was a candle that went up. Okay, and then obviously we have this boss here, this is the head. Okay, this is the head. Okay, this resembles a human being, shoulder and head and a shoulder. Okay, and then since this is where they went up, the last point they touch when going down is going to be our neckline. Okay, so this is our neckline, and if you look at this carefully, you realize that this is a descending head and shoulder. Shabaka explained this very well. Okay, I want to show you something. Then they break out with a big, beautiful engulf. This engulf was big, but for people who saw this building up based on either a US 30 or the S&P, most of them, I believe, they took roughly the trade when this candle broke up and went down. Okay, because the signs were there, and I'll show you where the signs were. Okay, so you see, for those maybe who took this candle over here, this one didn't really deliver that much. Okay, it delivered roughly 32 pips. Okay, but I want to show you something. Yesterday we talked about this levels, the low, and unfortunately I believe many people actually thought like the criteria have changed. Criteria haven't changed. It's just that the low and the high are important key levels, and we have been talking about them for the longest time. Okay, so if you look at US Tech, which is Nasdaq, and S&P 500, the correlations are strong because mostly they are moving in the same direction, in the same way, so their correlations are strong. You can use one to judge the other. Okay, when correlations are strong, take advantage of correlations when correlation is still there, because correlation changes over time. Okay, so there are days when all these indices will be correlated. However, there are days when they will not be correlated, but most of the days one of them that actually isolates itself and start moving in its own direction is US 30. But there are days when you find that they're giving the same kind of moves, and that's when you get a clue. Okay, so look at what really transpired here on Nasdaq is at a level. Nasdaq is on the low of yesterday. Okay, if I am to draw something here, you realize now that Nasdaq is on the high of yesterday. This is a very important key level. Okay, and if you need the easiest trade, obviously you can't sell into a very strong resistance. Okay, those who believe in support and resistance, this is a very important level. As you can see, that's why I told you that they are trapping between these levels. This clearly tells you that these are important levels. Okay, so we did explain this yesterday. Unfortunately, for those who didn't watch yesterday's video, maybe they might have lost, but yesterday I told you I look at these indices simultaneously at the same time, and mostly one is gonna give an indication of what the other one may do. So today I saw this, guys. I took US30, but I saw this happening, and it actually happened after US30. I saw this happening, but I didn't take this one. Even when it broke out here, I didn't take Nasdaq. Okay, and here's the reason. You see this, we are at an important key level. Okay, an important key level. This is where we are more likely to find resistance. Okay, since we are above. If we were below, this is where we are more likely to find what? Support. And let me just show you, guys, I want you to understand these things, hence I'm dwelling more on them. If you look carefully, if I am to draw a line on the closing price of yesterday, you see this red dotted line, you'll see that, okay, prices bounced on this line too many times. You see, they bounced, they came, bounced, they came, bounced. Okay, and then they came on top, they bounced, they kept bouncing before exploding. Ask yourself, why do they explode on these levels? Obviously, these are important key levels. That's where you're gonna get resistance and support, right? So the same applies to this level, which is the high of the previous day. That's where you're gonna get most of the support. So judging based on the correlations. Obviously they were giving the same kind of move, that's why they gave head and shoulder, head and shoulder. Even S&P 500 gave a head and shoulder. We'll go to S&P 500. So this trade here, for those who literally saw, we got many patterns, right guys, we got many patterns here. Okay, we got many patterns. Okay, you can, some people took it from here, some people took it from here. Okay, and then there are people who literally saw something like a rectangle. Let me first draw this out. Okay, there are people who saw this. Okay, there are people who saw this and literally saw this before breaking down. Okay, now, okay, there are people who saw a right angle, triangle, before prices literally did what? Before prices broke down. Okay, there are people who saw this, and people took this candle as an evidence candle. But guys, you are at an important level. Okay, if you did that before yesterday, I would understand, but yesterday we explained the same thing. It's no coincidence, these things keep happening. Okay, and this is where people thought, now this is a new strategy. No, it's not a new strategy, it's the same strategy, but these are important key levels. You can't sell when you are bouncing on a key level. Okay, because this is where you might find the best support. So again, if Nasdaq is on an important key level and they are correlated, if this one reverses, obviously S&P 500 is mostly gonna reverse. So if you were observing this indices at the same time, you would have seen that this poses a lot of risk. Why? Because it happened at the same time as this on Nasdaq. And then I know you ask yourself, why didn't they trade play out? But I waited, the strategy is not winning. It's not that the strategy is not winning, guys. I told you, when you take a trade, there's a lot of things you have to be thinking about. You have to be, guys, if you go to my like, I think videos that I did last month and before, you'll hear me saying, when I take a trade, I'm thinking about the levels, I'm thinking about the time, I'm thinking about the patterns, I'm thinking about a lot of things, the type of candle I'm seeing. Okay, that's why I keep on saying read, backtest, read, backtest. That's where you're gonna learn a lot of things. Okay, so you can see they did provide support, and if we are to draw this pattern going further, again we can introduce another pattern here that I believe most people maybe might have seen. You see, some people saw a rectangle here. Okay, some people saw a rectangle. Let's just take it to where the bodies were touched numerous times. So when it comes to patterns, guys, sometimes somebody's gonna see something and somebody's gonna see something. Okay, and that's, the judgment is up to you. Okay, the judgment is 100% up to you. Okay, there are people who saw a rectangle like this. I will remove the line on top so that you can see. Okay, but again, this is where they, if you saw the rectangle, let's first remove this line over here. If you saw something like a rectangle here and then they bounced on the line, obviously they went and touched it. There is no pattern that has been completed until they break out with a beautiful engulf. Now this is the trade. Okay, this is the trade. Okay, they've bounced from the biggest resistance. Volume is trapped down. I told you I don't want to be taken all the way into trapped volume. Okay, you can see this was the easiest trade. The problem with people is you want to predict prices. Wait, the trade will throw itself at you. Your job is just to be there. Sit on your hands, don't be moved. The problem is most of the time the markets actually have been well designed. They've been designed in a way that most people think, oh, what if they go now they're just going to explode straight. That's the problem. The markets will not do that because they know that if they explode straight, most of the time before the pattern is even completed, most of you are going to get it. So they must shake you. Get in, lose. By the time you see the trade, you are doubting because maybe you've taken 3 losses. Okay, so guys, this is important. You see, if you saw a rectangle, the trade was thrown at you. Okay, the importance of the key level. This is what I explained yesterday, and I know, okay, because somebody commented and asked, has the criteria changed? I told him that nothing has changed. This is what I've been saying all along. The levels are important. Okay, the levels are important. As you can see, even if you saw a right angle triangle, now you can see what transpired. We are at a level correlation is too high. They are giving the same patterns. Even if you look here, they are giving the same kind of thing. So this shows you correlation. So you would have seen that taking a sell here is very, very fatal. Okay, I saw these things happening. It's not like I'm more experienced. No, when you back test, looking at the levels, looking at the times, looking at the kind of candles, looking at the pattern, those are the things you have to ask yourself. I told you, I am now studying the moves that happened before. I'm not just going to jump into them. I'm going to take time to study them, and then I will be able to come up with a better strategy to actually tackle this kind of moves. Okay, right now I don't have a strategy, okay, but I will do that. Why? Because you tend to see what happens at what time. The most important thing is knowing what time and what exactly you are looking for. Okay, this one was valid. Okay, why? Because let's look at USDT. I want to show you something important, guys. Today I'm showing you something very, very crucial. Okay, trapped volume. Obviously, everybody who sold here on this closing price is literally in a loss when this move moves up just before the session begins. That's why we always wait for the session, okay, because it helps us know who is trapped. Okay, so look at something. Why don't you ask yourself, they bounce? Okay, you see they, okay, let me just actually try to blow this up. I want you to understand the importance of these levels. You see, all along they come, they bounce, they come, they bounce, they bounce. All of a sudden they move up, now they bounce, oh, they bounce, and then still again you think it's a coincidence. No, these are the most three important levels if you're a day trader. Okay, so now I believe you see why yesterday I spoke more about the levels. Okay, so guys, let's look at something. Today there was just multiple opportunities, okay, and there's just a lot to share. I won't be able to share everything, but let me just show you. You see, this is the trade I took. Okay, this is the beautiful trades, opportunities everywhere. Just when you think like I know many people thought like, oh, this strategy is not working. Guys, it's not about the strategy not working. You're not gonna get wins every day. Okay, there are times you'll take losses, but the strategy is there. It doesn't mean the strategy doesn't work. Okay, look at this. This is a head and shoulder. I know people are looking for a perfect head and shoulder now. Okay, this is the most perfect head and shoulder, and I know there's somebody who said the pattern was different. Yes, it again, brokers can show you something different. Okay, but look at this. This is the neckline or the death center. Okay, look at this, guys, look at this. And I told you, I love it when I see something like pumping and dumping, but this is a head and shoulder clean. I also showed you recently head and shoulder with two heads. Okay, let me just split these heads into two. I know, and I was happy because there's somebody who commented and said what a weird head and shoulder, and then I took a screenshot from Shabaka's book and I actually posted it there just to show you that this is a valid pattern. It's a valid head and shoulder. That's why I say read. This one, wow. Even if today you just took one trade and this was the trade, remember, you only came when the session opened, and the trade literally happened roughly 12 minutes after, and you were just there for roughly 14 minutes. You walked away with 100 pips. You are done with your day. It's not a matter of stressing yourself or struggling. Take what you want, get off the screen. Okay, again, yes, we have a level here. This is important. You see what they're doing? They will always bounce on these levels. Why? Because these are important key levels. Okay, let's look at what happened. They gave a beautiful trade. Okay, they gave a beautiful trade. So if you look at them, they all gave a head and shoulder. This shows you that the correlation was strong today. So this gave the trade early, okay, the downtrend early, which was a sign that, okay, this breakup will literally pay, even though it didn't really go all the way to paying 50 pips, but eventually, yes, here it paid 30, and on S&P 500 it gave roughly 40 pips. Okay, but it's something for those who took it. Okay, So now I've showed you how to judge a trade. Compare them, look at the levels again, compare them, and take the easiest kind of trade. I'm trying to explain things slow because most of the days I'm so fast trying to cater for those who say they don't like long videos, but it's not fair. I've realized that people were putting in the work very hard, and if I'm cutting the time and leaving things out for them, it's not going to be fair. Okay, you see the patterns will always be there, but here the correlation on Nasdaq told you that, hey, there is like some danger that can happen because now we are at a level. Okay, so now let's go to the second opportunity. Obviously this was the second reversal opportunity. Beautiful, beautiful, beautiful trade. Beautiful, delivered 50 pips. Okay, beautiful, 50 pips in 32 minutes. Okay, beautiful trade. And I want to show you something. This is on Nasdaq. Let me come and show you something. Correlations are powerful, guys. You see, uh you see here, this one, the pattern wasn't so clean. Okay, wasn't so clean. Okay, but yes, they went up. Maybe you took Nasdaq because it was the most cleanest one. As you can see, even if you use the rectangle, this is just where they bounce out of the rectangle. So this was the easiest one compared to S&P 500. Okay, and the first trade here, the easiest one was on US 30 because this one gave a very beautiful less risk. Therefore the risk reward was good. Okay, because it's 16. Okay, so if you understood what I've been saying this week, I told you, compare them and take the easiest trade. Don't stress yourself, don't get married to a certain index. Compare them, take the easiest one. So this one was the easiest one when they went down. Okay, however, when they went up, this one was the easiest one because I told you, if you saw a rectangle, obviously I just showed you this. If you saw a rectangle, okay, if you saw a rectangle, let's see, I take the bodies. Okay, this line must be straight. You see, if you took the rectangle, obviously you took this trade, and this one you couldn't take it because we were at a level. Okay, so again, this, when they went up, this one, Nasdaq, was the easiest one. Take the easiest trade every day. And then later today, wow, I told you today, I don't know what was happening, guys. Today, yes, we had news, but not strong news. Okay, not strong news. Around 2 p.m. South African time, we had news, but not strong news. Okay, and then we all know that mostly they are these days moving prices late, and they just have that day. They did this in December, whereby they moved the markets like 700 bips in one night. Okay, so they repeated it. Just look at this. I was glad because somebody commented and said they took the Head and Shoulder. Okay, that was beautiful. Just look, Head and Shoulder. Perfect. It breaks down, it pumps again and breaks down. Okay, this is what I love, guys. I love it when they start by pumping and then they just collapse. Okay, even if you took this one, if your stops were not that tight, you got this one. Okay, and sometimes I told you, you'll enter, they'll close you, and then you can take a re-entry. Okay, because you see that your trade is valid. Okay, your trade is still valid, obviously, when they break down. Okay, even if you see this candle, the trade is still valid. Okay, and just look, these are those moves that if you counter trend, they're gonna blow your account. Just look, guys, just look. It's late in the night. You know that they are not just gonna collapse and then bring prices and close you. No, they're not gonna do that. When they move around this time, it's late already. There's only roughly 2 to 4 hours for the market to close, and we don't have those powerful news. So this is a trade that just falls and collapses. I understand if you took your 50 pips, that's beautiful, congratulations. Okay, but this move that is happening late, mostly they just go. Even if they are closing, they'll just come and correct a little bit. Okay, but they are not gonna come back for you because these late moves are amazing, guys. You see, when we go to S&P 500, this one now gave a beautiful trade. And if you're relying on the correlations, you would have seen that they stop hunted everybody who was in profit earlier on. Power of correlations. I did speak about these things, but the problem is people are not really putting in the work. And when you're not putting in much work, you then struggle to see what really transpires. Okay, you then struggle, because when you're taking a trade, guys, when you're looking at the charts, there are many things that have to be going on in your mind. Okay, they've closed these guys, and then again, correlations. Okay, they've closed these guys. Just after closing, they gave something like this is a beautiful pattern. I love these patterns, and this is a beautiful pattern. This is what? This is half Batman. If you just do a Google search and search half Batman pattern, you will see this is half Batman ears, and then they collapse down. What a trade. What a trade. They collapse down. Okay, even if you waited for a pullback, they did, and then here is another engulf. Even if you're using the EMA, that literally confirmed your trade. Guys, if you are putting in the work, you will see this trade. Beautiful. For those who took this candle and put their stops here, you were safe. This move, wow, this one went over 1,000 pips today. Just imagine 1,000 pips with multiple entries. Okay, trades that happen usually this late, they are not trades that are coming back. Okay, and by the way, if you understood what I share with you every day, you would have known what kind of trend do you see. What kind of trend is it now? What kind of trend is it? They're giving a trend going down, and now another trend line. This is an explosive kind of a trend. Okay, an explosive trend. This trade is not coming back. This trade is not coming, and those who counter trended, I'm sorry. Okay, this is amazing. I thought it was going to end at a level, but it just kept going down and down and down. 1,000 pips down on S&P 500. Very easy trade. Beautiful pattern. Oh, but people say a half Batman pattern doesn't exist. I tell you to read for a purpose. You see, this is your playbook, guys. Okay, this is your playbook. Okay, when you look at your playbook, you will realize that okay, when we are from down, we have a half Batman. Here it is. This is where we get half Batman's ear. This is your playbook. It's there in your playbook. Okay, okay, guys. You see, this is your playbook. The problem, every time I want to publish, there's something I have to add, because I realize that people are failing when it comes to understanding the importance of patience. You don't have to force the pattern to complete. You are not in charge of moving the price. If you force the pattern to complete, and what I mean is like, okay, the pattern is about to complete, and now if they give a candle like this, I'm in. No. If you do that, you're going to blow your account, because they will show you when they are ready. Wait for their leg. So these are things I realize that people are failing or are finding it difficult, okay, to understand. So every time I have to add something, as you can see, even the pages on your playbooks are actually increasing, okay. And there's another part that I'm going to join here, which is going to make your pages way too many. But just look at this, guys. The patterns are there. I showed you the trends. They are there. The patterns are there, okay. Everything is there that you need. Death center, okay. If we go back to your charts, you realize that all these things are there. Death center. This is a death center, okay. Aklisha Barker calls it a death center. But you see, stop hunt, guys, they are not coming back. They are not coming back. Explosive trend. Yes, for me, I'm very, very cautious, because I don't want to be taken back into trap volume, okay. But this is a move that happens late, and this move is not gonna close you, okay. This move is not gonna close you, because these kind of moves that happen late without any red news, they are just gonna go and go and go. They can go the entire day, and this is the kind of moves that you will see on Fridays. I'm saying this now. When I come and say it in another video, maybe 2 weeks later, when that has happened, most of you are gonna say this is new, okay. I'm saying the most of this move like this, the moves that just go in one direction without reversing and everybody tries to counter trend it, these moves happen mostly on a Friday, okay. Tomorrow it's non-form. I don't know what's gonna happen, but today a lot happened, okay. This is S&P. I showed you here, they gave a head and a shoulder, and then immediately they collapsed. These moves happen late, they are not coming back. When we look at US 30, US 30, what do you see? I personally see a head and shoulder. That this head and shoulder was literally delayed. Okay, it was literally delayed. Okay, it broke out, pulled back. If you talk a loss here, well, that's good because you saw that this is literally a pattern and this is an engulfing candle, an evidence candle. Yes, of course, they came and closed you. Okay, but what you saw was good, so you can retake the trade. The problem is most people, when they lose, there are times when your trade is not invalidated and then you think like, oh, I've lost, I'm not entering again. You see, if you took a loss here, just look. I love it when they do this. Something like this is what I love most. Okay, when they do this, wow guys, I love it. You see, I love it. I love this. This is where they break down, they go back, pump, and they dump finally. So of course, if you took a loss here, it's okay. Okay, it's okay. If you, okay, one candle stop, they closed you, but still this trade was still valid. Okay, laterwards it was still valid. As you can see, this trade was still very valid. Okay, okay, this is where they start giving you an asymmetrical triangle and they break out. But guys, amazing, 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 amazing. Anyway, I've spent a lot of time talking today. It's because I'm relaxed and I'm trying to explain most of the important things. Everything is there. Most of these things I've talked about, and everything is there in your playbook. It's just that every time I say I'm gonna post tonight, I end up having to add a lot of things because it pains my heart when people are actually losing. So I'm trying to include things that will really help you. Okay, but at the end of the day, I need to publish it. Okay, because once I publish this strategy, it's gonna take some times before I come back to it and actually updates it. But I'm gonna post it. Okay, I hope that by the time you all wake up, it will be live on the website. Okay, so I'm gonna work throughout the night, try to see what I can add and add, because there's a lot of things you have to be thinking about when a trade is happening. By the way, this video has taken way too long. I thank you guys and I love you a lot. Tomorrow it's non-farm. We're gonna have beautiful trades. Don't guess news. Don't guess news. Wait for the news to trade. They will show you the direction when they are done. Guys, I love you all. Have a beautiful night. Thank you.